questions. I dedicate this part of my time of the day for you guys. And I'm going to go ahead and read that. So if you're joining, and I'm always curious about what type of business you guys have and where you're from. So, hi, Bolivian girl. Hi. So, guys, yeah, let me know what type of business you got. Let me know where you're from. Happy holidays, of course. Hope you guys like my Santa hat. And we can just jump right into this. So, who? Let me know if you guys started a business. Let me know where you're from. I'm from Dallas. I'm from Texas. Where you guys from? We're also live on YouTube. Hi, YouTube. And then we're also live on Facebook. It's just always a funky angle with Facebook, of course. Okay, we got 5 people in. Hi, guys. Welcome to tonight's live. It's Happy Thursday, of course. Hi, Facebook. Hi, YouTube. Hi, Instagram. And hi, TikTok. I'm from Jersey. Hi. I've kind of been up there, but I've never really been out to Jersey. But I've always thought about it. Hello, what's up, Monica? How are you doing today? Hope all you guys had an excellent day. For sure. Guys, hey, 2020 is wrapping up pretty quickly. So it's really important that if you Houston, we got Houston in the house. What's up, Houston? All right, we're kind of neighbors. We're close. I'm from Dallas, so we're fairly close. But guys, here's some things you want to make sure you take care of. If you're a business, make sure you take care of your bookkeeping. Okay. This pretty much means keep good records. If you can keep good records, you're going to have the easiest tax time ever. So someone wants to know what part of New Jersey you're from. What happened to my Instagram live? Yeah. But yeah, guys, make sure this is just like the tip of the day. And Christmas is coming real quick. Christmas is coming a lot faster than I expected. Who's ready for Christmas? And what do you guys want for Christmas? I don't want much really. Hi, what's up? What's up, Miss? How are you doing today? Thank you for joining. I can't stop smiling. Why am I so happy? I don't know why I'm so happy. But guys, it's really important if you have not taken care of your bookkeeping that you really want to do so. And I know Facebook's always at a funky angle. I'm getting kind of small. I know Facebook's always at a funky angle, so let me try that. Yeah, you get the gist. But guys, make sure you're taking care of your bookkeeping, your record keeping. You can just do this. It's so simple if you just have something as simple as writing it down. I always recommend QuickBooks. Hi, I'm from Texas. What's up, Texas guys? If you're just joining, let me know where you're from, where you're located. I want more sales on my Amazon account. So you want more sales on your Amazon account. How are you driving those sales? What are you doing currently right now to get those sales? I want my kidney and pancreas transplanted. Well, I hope you get that. That sounds really sad. I'm so sorry. Guys, let's hope that Anna Castillo can get her kidney and pancreas transplanted. Seriously. You're live again. I'm live every single day. Every single day. Yeah, that's it. I'm live every single day, 8 p.m. Central Time for you guys. So if you guys have questions, you can always feel free to ask me those questions. I go live for you guys. So every day, 8 p.m. Central Time, till I can't go live no more. So yeah, and that's nice. Yeah, absolutely. Because I know you guys have tax questions. You see, I have my shirt on. I know you guys have tax questions, and I just want to be here to answer these questions as best I can. I do this right before I go to sleep. I go to sleep fairly early. Kind of how my day goes is I wake up about 3 o'clock in the morning. Thanks, that's so sweet. When you guys say thank you, that seriously makes my day. That makes me so happy. I don't do these TikToks or these lives. I don't necessarily, do it for money. Of course, I get some leads out of it. Like some of you guys actually want to reach out and work with me, and I appreciate that. Especially the ones that want to work with me and they pay. I really appreciate that. But at the end of the day, I don't do it for that. I genuinely do this for you guys because I just feel like there's so much misinformation out there that I can be such a good source. I have a pretty good amount of following. I have about 200,000 followers right now, and I feel like I can just provide so much value to you. I can give y'all the truth, the answers, instead of y'all just happen to go to Google. Like I don't want you to stress. I want you to start your business. I use my platform to educate you guys enough so you can have the confidence to start your business, to take tax deductions, right? It makes me happy. Hearing you guys start your business makes me happy. When you guys say thank you, I appreciate you, that makes me happy. And it continues to motivate me to continue to make content for you guys. It motivates me to keep pushing for you guys. And that's really what I do it for. And I get happiness out of it. So yeah. Thank you for sharing your knowledge. You're welcome. I've been furloughed from my 9 to 5 job, so I just started my Amazon stuff. Nice. I mean, I love how you took a misfortunate and made it into an opportunity. That's what's up. I hope you kill it. I'm gonna be real with you, Chief. I was just crying because I was getting alone, but it's like, oh my God, that's so nice. I'm so happy I'm able to help you guys. Like that, see comments like that is the reason why I do this. If I can just put a smile on your face, if I gotta wear a Santa hat to keep you guys engaged, I gotta put a towel on my head. I gotta talk like this. How about my taxes? If I could do things like that, like I'm totally cool with it. I don't care. I just want to take care of you guys. Like that's it. Like that's it. I just started my eBay recently. Yes, we have somebody else who just started like their own business or their own like site that we just have. I need to get like a bell like every time you guys do something exciting. That's phenomenal. Thank you. You're welcome, Freddie. I do this for you guys. Awesome. How do you file stock taxes when I sold them for going down? You might have a loss. So yeah, you might have a loss on that. So which will help because you can use your loss to offset other passive income. Can you claim solar? There are solar tax credits. I'm not 100% like an expert in it. I can do some research for you and get back to you. I can write that in my research book. Yo, what's up, Jordan White? What up? What up, Facebook? What up? What up, Facebook? Yeah. So I can write that in my research book. Like, guys want to learn like solar credits. That may be a good idea for a video. Trying to get a CPA to file my taxes, but that costs so much, $600. That's pretty expensive. If you want me to file your taxes and help you with that, just go to the link in my bio, fill that out, and I'll totally cool to work with you. You're a really likable personality. Thank you so much. Yes, that makes me happy, guys. So you guys have been giving me many ideas like on the next video, and I kind of want to like run by because I go live I've been going live every single day at 8 p.m. Central Time. And a lot of people give me ideas. So this is kind of what you guys have been telling me, and I want your feedback. So we have sales tax, we have client gifts, we have college students deducting computers like laptops, qualified joint ventures, estimated tax payments. I did a video on that one, kind of. The SBA loan as income. What if your business lost more money than what it made? Not all income is taxed equally. different streams of income, forms of income, the earned income tax credit, claiming your boyfriend as a dependent, expensing policy, and solar credits. That's what's in this book so far. So out of what I just named, which one sticks out to you guys? You're like, hey, you know what? I would love to learn more about that. I would love to see a video about that. Which of those, of what I just mentioned, stands on to you? I'm looking on Facebook. I don't see a comment there. Thank you. I don't see a comment on Instagram. But I kind of like the college one. Oh, I did do client gifts. I already did client gifts. Maybe sales tax. What do you guys want to? What do you guys want to see? What was the last one? The last one was solar credits, and that was just in this video today. So I want to get a mortgage, and I'm independent contractor. My letter says be careful with write-offs. Absolutely, that's a really good thing because if you're an independent contractor, like the cool thing about being an independent contractor is that you're self-employed. Like that's so cool. You're doing your own thing, which means you get deductions. So if your deductions are too much, your income's not going to be that high. So you want to work with a tax professional that can help you determine the right amount of expenses you can claim on your tax return and what you probably want to carry forward. Because really you want to hit that sweet spot of what the lender is requiring for you to show. So if they say, hey, on your schedules, by the way, you're going to fill out a Schedule C. If the lender's like, hey, we need to see $20,000 of income for the last 2 years, well, you don't want to write off more than $20,000 of deductions. Thank you for the gift of, okay, the college one. How do I file my husband's tax credit if they won't give him a 1099, but he really self-employed? You would just have to report the income yourself. So hopefully you guys track the income, look at your bank statements, and reconstruct those income and expenses. People who got the PUA money, how is that going to look during tax time? Hopefully they had taxes withheld from their checks, and that would help. They're going to get like any other form by January 31st. I just started my first job. Do I file taxes? If so, how? You may be required to file a tax return if you made more than the standard deduction, which is $12,400 if you're single. Either way it goes, you should still file one anyways. You go to TurboTax, it's completely free because you might have a refund. You should still check that out anyways. Okay, the college one. Yeah, the college one. I'll say, also, is it true that there are ways to profit off your own debt? It sounds like a contradiction. Yeah, so like it's possible, especially if you're investing into like assets. So and I really wouldn't say, well, yeah, you can make a profit at the end of the day, but it really helps with like writing off taxes. So let me give you guys an example. And this is a really good tax strategy if you guys just want to carry this forward. Okay, so this is a really good tax strategy. Okay, so let's say you have a credit card, and that credit card has a $500 limit. Or yeah, let's say your credit card has a $500 limit. So you go to Best Buy and you buy a laptop. Okay. So you said, let's say debt. I'm gonna name this debt and write-offs. And guys, this is a really good tax strategy you can use, especially at the end of the year. So guys, watch this. This is pretty cool. Okay. So let's say you have a credit card, or a credit card with a $500 limit. Okay, you have a credit card with a $500 limit. So you go to Best Buy, you buy a laptop. You buy a laptop with that debt. So it's not really your money, it's someone else's money. So let's say you buy that laptop, right? So you buy a laptop. laptop for $500. Okay? You buy a laptop for $500, and let's say this credit card has a 0% interest rate. Let's say you got it for the first year, and they're not charging you interest. Okay? So guess what? And let's say your monthly payments on a credit card is like $25. Okay? $25. Your monthly payments, your monthly payments is $25. Okay, $25 a month for a laptop. So what's neat about this is, you purchased a $500 laptop, but you only spent $25. But you can write off the whole $500. Okay, so you're writing off this laptop. Now, there's a procedure, the way you have to do it. You're going to have to establish something called an expensing policy, and you're going to have to make a de minimis safe harbor election for this to work. And it's just, So that's how debt can really help you, save on taxes, because you've only made a $25 payment. You only paid $25. Realistically, you only paid $25 because the credit card money is not your money. So realistically, you only pay $25, but you get the write-off $500. And so that's how that can help you. And a lot of people in real estate do that too. They'll get this big old loan, right? They'll get this huge loan, like let's say like $200,000. Maybe they could have put nothing down for it, and they can depreciate that over the years. So that's how debt can help you. So there's good debt and bad debt. And that's one way it can help you. No. That's one way it can help you. Guys, if I missed your question, just please ask it again. How do I pay less taxes when filing for a rental property? You want to make sure you're claiming depreciation. That's often missed on a lot of people who have rental property. Depreciation is really missed. Depreciation. Make sure you're claiming that. Can my boyfriend claim me? I'm a stay-at-home mom with their 1-year-old. It's possible for your boyfriend to claim you as a dependent. You have to meet certain qualifications, but it is possible. Great question. How do I feel assessing with rental properties? Depreciation. That's going to be your best expense. Especially if you own the property. Let's say you do like Airbnb or you rent it out to somebody else, depreciation. And you're going to want to file a Schedule E with your personal tax return. So if let's just say you have rental property, you just rent it out, you're going to file Schedule E. Even if you have it under an LLC, you better have your rental properties under Schedule C. That's the best structure to do so. That's the best structure to do so. You want to file Schedule E with your personal tax return. So that's a great question. Can you rent your house out to yourself for parties 14 times a year for $1,000 each? So you're referring to the Augusta loophole. Yes, it's possible, but it's really like complex. I probably shouldn't be talking about it on a lot because it's just so much miscommunication that can be destroyed away. Maybe I can make a video on it. Let me put that in my, what did I call this thing? Dang, I forgot what I called this thing. My research book. Woohoo! So we got a research book. So maybe I can make a video on that. And let me know if you guys would want to see. Give me like a thumbs up in chat. Like, yeah, I want to see a video on the secret loophole. Let me know. Augusta. Yeah, let me know if you guys want to see a video as a write-off. What were we talking about? We were just talking about using debt to write things off before, and then right after that, we're getting into rental properties. So, great way to save taxes when you have rental properties. I like how knowledgeable you are and well-spoken. Thank you so much. That makes me happy. Based in Dallas, Texas. Do you do consultation? Absolutely. Your best bet is to go leave this live, go click the link in my bio. It says hire me. Fill out that quick application. If you meet their criteria, we can definitely set up a time to talk. If I'm too busy, I have so many other colleagues that are by my side and they help me out so much if I'm not able to get to you. So either way it goes, by clicking that link in my bio, you will be taken care of. I can guarantee that. My employer that applicable federal and state taxes will be withheld even though I'm W-2. I'm not sure. Yeah, so if you are W-2, your employer is required to hold those taxes. Yeah, but I remember the balance of force employees still do so 100 write-off. So yeah, but the balance of force has still do so 100 write-off for. Yeah, so yeah, you can write off the whole $500. So with this example, even though you paid $75 and $475 is still due, you'll put that $475 on your balance sheet. I mean, it's just a business credit card. You put it on your balance sheet. Other than that, if you use a credit card, if you use a credit card to purchase the laptop, right? The credit card limit's $500. The laptop's $500. But you only pay $25 a month. Let's say you bought it in December. Well, you can still write off the $500, even though you only pay $25. So it really helps with your cash flow. That's what I like to call it. Yeah. Thank you, bro. You appreciate it. Thank you. No, thank you. Okay, yeah. Can you do a video on taxes for first-time homeowners? Yeah, but so there's this kind of like this. Yeah. I can think about it. I think about it. Let me put it in my book. Guys, this book is filling up. This book is filling up. First-time home buyers. Yeah, that's up there. Yeah, I got that in my book. Hello, Desday, New Jersey. What's up? Guys, if you're just joining, let me know where you're from. Also, if you own a business or you do some type of business, let me know what that is. I'm always curious about what you guys do, where you guys are from, who started their business, who's thinking about starting a business. Don't be scared. Don't be scared. It's okay. Guys, we are all in this together. So everybody, and there's so many people who's starting a business. Okay, we got some from I'm from Dallas. I'm from Dallas, Texas. We got New York City. We got Wisconsin, Puerto Rico. What's up? We got Puerto Rico in the house. We got Utah. We got Alabama. From Jersey originally. Walk in the building. Highs. I own a hair salon in Iowa. What? That is so cool. Do you do like your own special hairstyles, or you just do like regular hairstyles? Like, do you do haircuts? Colors. We got Virginia in the house. What's up, Virginia? What's poppin', Virginia? What's up? Oh, we got some on Facebook question. Guys, I gotta bring this one in a little bit closer. We got one question. I bought something for my business that I just started on my debit card. Can I write it off on my taxes? Or should I use a business card? So the question is, hey, I just bought something on my personal debit card. Can I still write that off as a business expense, or should I use a business debit card? So the answer to your question, Yanni, is yes, you can, even though that you use your personal business debit card, you can still write that off as a business expense. But what's really important going forward is that you don't want to make that into a habit. So guys, if you're using your personal debit card for business expense, you do not want to make this into a habit. But if it happens, it happens. That's okay. Totally cool. Just document it, right? Record keep it. So when it's time to file taxes, that you can still take that deduction that you are entitled to. But what I would encourage you to do is just don't make that a habit. break out of the habit because it's going to get worse. It's like smokers and drinkers. It becomes habitual. So just try to jump out that habit. But to answer your question, absolutely. If it's a legitimate business deductions, you can still deduct it on your tax return. All right, that was a great question. And let me know if I answered your question. If not, just ask it again. I'll give you more clarity. That was a really great question. Great weather up here. All right, I specialize in color. Nice, cool. My favorite is vivid colors. I love the business side of things too. Nice, learning the business side too. Right, cool. I like. I think it's cool when girls have like their um, hair dyed red. Um, what tax do small LLCs have to file on a starter? So if you're just a single member LLC, if it's just you, you're going to file a Schedule C with your personal tax return. So you're going to file Schedule C. Schedule C, I see you. You're going to file Schedule C with your personal tax return. Pretty early here, no snow yet, no snow. We ain't got no snow either. I want to start a business, but I'm scared. What are you scared of, Puerto Rico? What are you scared of? What's on your whiteboard there? So we were just talking about credit cards, how you can use a credit card to help you increase your cash flow. So what that pretty much means, let's say you have a credit card limit of $500 and you bought a laptop for $500, right? So you didn't actually use your money. You used your credit card money. So you didn't actually use your money. So what's neat about that, let's say let's say you made this purchase in December, your credit card company is like, hey, just give me $25, zero interest. So you make your credit card payment of $25, but you still get to write off $500 because on that receipt it's going to say you spent $500. So that's the neat thing about credit card. That's what's on the board right there. Should I be paying myself for my business? All my sales going to my business bank account. So to pay yourself, what you're simply going to do is transfer money from your business bank account to your personal bank account. It's really important that you guys understand that paying yourself as a sole proprietorship, as a single member LLC, is not a deductible expense. So you can't write off paying yourself, but you're totally allowed to pay yourself, and you should totally come up with a good structure that you can determine the right amount to pay yourself. So what's really good at this point is you really want to sit back. You really want to just sit back and look at your personal life. You want to look at your personal expenses. What are your ongoing monthly expenses? What is your rent? What is your mortgage? How much do you spend on groceries? Do you go out to eat sometimes? I don't know. You want to really hone in on your lifestyle, hone in on your spending, and you want to create a business that can support that can pay that amount and then more, right? So you want to be able to still be able to do the things you want to do on a monthly going basis. So you want to make sure your pricing structure is really important too. So this will help you determine your pricing structure. Once you have that, simply pay yourself. Don't touch the business profits. As much money you can keep in your business account, the better. Now, it doesn't help on taxes. I want you guys to think strategically here. I want your business to grow. I want your business to scale. Like every time you get paid, you spend it. It's going to take longer to scale than if you were to leave it in there, possibly reinvest. But the moment you take it out to pay yourself, it's so easy to keep doing that. So you really want to be disciplined when it comes to this. Just because you got paid in your business, that doesn't mean you made a profit. Just because you had a sale, that doesn't mean you made a profit. Okay? So that's why bookkeeping is really important. So really you want to really assess hey, what are my monthly spending, and get really serious about it. Then you want to make sure you can create your business around that. So you want to make sure you have your pricing right. Your pricing is really important. Your pricing and the amount of customers or clients that you see. So that's a really good way to determine how much to pay yourself. You want to look at what do you do personally. Now, just remember, guys, it's not a deductible expense. So when you pay yourself as a sole proprietor, as a single member LLC, it's not a deductible expense. Thanks. You're welcome. Can my boyfriend pay me as a? I'm saying, yeah, it's possible. You want to really look at your different scenarios. It's possible. I can make a video on that probably. You guys are asking for a lot of videos. I've been selling on eBay this year, and I'm close to the limit for the 1099 and collect unemployment. Well, it's just really important that when you hi, it's on the K. It's really important that when you're requesting unemployment, that you're reporting, what you're bringing in from your business. They're gonna ask that. But still file like you should. Still report the 1099. And congratulations on eBay. If you're about to receive a 1099 on eBay, you must be killing it. Like, first of all, pat yourself on the back. Let's not forget about that. Let's not forget that you are absolutely killing it on eBay if you're about to get issued a 1099. But also, try not to worry as much. Follow through with the process. File your tax return, report the unemployment income, report the eBay income, and just keep floating. But always do the right thing. What happens if you don't report? They may file a tax return for you. Call it SFR, called a substitute for return. If you have an S corp, can you deduct? Yeah. So if you have an S corp, yeah. So one of the requirements when you are an S corp is that the owner is on salary. So if you set up an S corp, which I don't recommend you do it by yourself, please work with a tax professional because there's so many ins and outs of an S corp. And I know TikTok and Google and YouTube makes it seem really simple, but it's not. It's a little bit complicated, but it can be done. So one of the requirements when you are in an S corp is that the owner has to pay themselves a reasonable salary. What's a reasonable salary? I don't know. A reasonable salary is what you would pay somebody else to do the job. Right? So let's say you have your business is a chicken sandwich business, right? And let's say you yourself, you were the cook. Well, how much would you pay a cook if you were to hire a cook? That's what you have to pay yourself. So let's look at it. And so yeah, to answer your question, if you're in an S corp, yeah, you can. So, and this is pretty much how the S corp works. I'll make this as simple as possible so you guys can understand. I guarantee you, all 18 of you guys watching this right now, you're about to understand how an S corp works in a very simple way. You're about to understand, okay? So, let's say your business brings in $100,000. Okay? So your business brings in $100,000. Nice. Congratulations. That's dope. Okay? So, and this is net income. Your business net income brings in $100,000. Nice. Great job. Okay? And guys, for anyone who's just joining, sorry, I forgot to write the title at the top. If you're just joining, talk about S corps. So let's say your net income, right? Your net income is $100,000. $100,000. Okay. So if you have to pay, let's say this is just like a regular. It's no S corp. Maybe you're just an LLC. Maybe you're just a sole proprietorship. Remember, guys, LLCs and sole proprietorships, 1099s are all taxed the same. So if you do DoorDash, you get taxed the same way as someone has an LLC. There's no extra tax benefits of having an LLC. Okay, so let's say self-employment tax is 15.3%. So right here, the tax we would be paying is $15,300 in self-employment tax. Okay, so self-employment tax is 15.3%. So if we make $100,000, we're just in the LLC, or we're just in a sole proprietorship, we're going to pay $15,300 in taxes. Okay, and that's just self-employment tax. We're also going to pay regular tax. And this is like the federal tax. So you know how we have tax brackets and stuff? You're also going to pay that. And let's say that is just, let's say that's 20%. Let's say that's 20%. All right? So that's another $20,000. Okay. So, and this is the LLC example. So the total amount of taxes we would pay, and if we make $100,000, total amount of taxes we pay is $35,300. Okay, and this is just example. It's not the exact amount, or just to get the point across, guys. Let's say that's the total tax amount. That's the total tax you would pay. All right. So your total tax amount is 35.3%. This is what you call your effective tax rate. To figure out your effective tax rate, you're going to take your total tax divided by your income. Okay, so we take our total tax divided by our income, we'll be at 35. We pay 35.3% of taxes. Okay, so that's if you're just an LLC, and if this works. This is the same thing will happen if you do OnlyFans and you make like $100,000. If you do DoorDash, you make $100,000. If you have an Etsy shop, if you do eBay, same thing. That all applies. Okay. So now let's talk about what happens when you're in an S corp. So that was LLC. So what you see with an LLC, we're paying 35.3% in an LLC. Okay. So now let's talk about an S corp. So one of the requirements of an S corp is that the owner pays himself a reasonable salary. Okay. So that's straight up and down. There's no way of avoiding that. There's literally a box on the tax form. You're gonna file an 1120S. There's a box on the tax form that says, hey, how much did you pay the owner? If that box is left empty, that's gonna raise flags for an audit. Okay. So you have to pay yourself a reasonable salary. So what's a reasonable salary? So it's what you would pay somebody else to do the job. So let's say in this scenario where it's like $100,000, okay, and let's say we have a chicken sandwich business, okay, and let's say we're just the cook, we're the cashier, right? And let's say we pay that person. Well, if I were to hire somebody to replace me to do that, I would pay them probably like $40,000. I wouldn't pay them $100,000. You wouldn't pay somebody your total net income. You're probably paying 40% of your net income, and that's a really good range. So let's say your salary, okay, is $40,000. Okay, and this is a W-2. Okay, this is a W-2 salary. W-2. So with that, okay, so W-2 employees, they only pay 7.65%. Okay, so there's no self-employment tax because you're employed. You're just employed at your own job. So the easiest way to avoid self-employment tax is to get a job. So what if your job's at your own corporation, your own entity? See, you can't hire yourself if you're just an LLC. You can't hire yourself in your business. You can't hire yourself if you're self-employed. Think about it. You're self-employed. You can't hire yourself. But let's say you had a corporation or you had an S corp. Well, you can hire yourself there, right? Give yourself a job. I don't know. I'm not saying actually give yourself a job application and do all that. But the easiest way to avoid self-employment tax is to get a job. That's why people who work at McDonald's, they don't pay self-employment tax. They have a job. The only thing when you're self-employed, you just don't have a job until you form an S corp. That's the easiest way to avoid self-employment tax. So meaning you're going to issue yourself a W-2 at the end of the year. All right. So with that W-2, now W-2 employees only paid 7.65%. So we have 40,000 times 0.0765. Okay. 40, 1, 2, 3 times 0.65. So this is $3,060. So our tax right here would be $3,060. Okay. Okay. So that would be our tax right here. And then we're also going to have to pay tax on the income. So, right. So the rest of this 60K gets issued to us in what's called dividends. In dividends, we pay ordinary income on it. So let's say this 60K gets issued to us in dividends, and we're still in that 20% tax bracket. So we take 60, 1, 2, 3 times 0.2. We're at $12,000. Right? So if we add these two together, we're at $15,060. Okay, $15,060. When we were just self-employed, we were paying roughly $35,000. Now, these savings aren't exact. The purpose of this video, what I just did, is to give you an idea of how an S corp works and how an S corp can help you save on taxes. So that was the purpose of this. Now, this isn't exact. I don't want you guys to go, oh my God, mommy, we should form an S corp, because it's not like that, because there's just a lot more to it. But for you guys, just to help you guys understand, that's kind of how an S corp works. And if I missed your question, just please ask it again. Yeah, so you're around 35K. You lost with the S corp taxes. I'm pretty knowledgeable on tax. Yeah, if I have to go over it again, I 100% will. Wow, Barry McCormick, thank you. You're welcome. What state are you from? Texas. No matter what, if you make it, you'd have to pay that 35K exactly. Yeah, but what if the business tax at W2 taxes? Yeah. Yeah. So you can't pay yourself a 1099. If you pay yourself a 1099, you're self-employed, right? So think about it. What do employees get? Employees get a W-2. And employees don't pay self-employment tax. They may get a refund. 1099s, they pay self-employment tax. Okay, so if you issue yourself a W-2, you're pretty much going to have to pay self-employment tax. So that's a deduction. But what's the right you can, but no, so no. Those are income is after write-offs. Yeah. If you guys want me to go over it again, I can. What questions do you have on the S corp? So I'll explain it one more time just to break it down. Okay. I'm gonna explain it one more time just to really break it down. But I think I can break it down even better. Okay. So let's say you have sales. Okay, actually, yeah, let's say you have sales of $200,000. Okay, you have sales of $200,000. Your expenses, you have expenses of $100,000. Okay, So you made $200,000, but you also spent $100,000. So your net income is $100,000. Your net income is $100,000. You made $200,000. You spent $100,000. $200,000 minus $100,000 is $100,000. Okay? So that's how you figure your net income in your business. You're going to take your total sales minus your expenses. That's your net income. That's your profit. That is what you're going to have to pay taxes on. Whether you're an S corp, whether you're an LLC, whether you're a C corp, every corporation or business pays tax on their net income. You don't pay tax on the total amount you make. You pay taxes on your net income. Doesn't matter how you're structured. Whether you're a sole proprietor, whether you're an LLC, whether you do OnlyFans, DoorDash, whether you have a chicken sandwich business, you're going to pay taxes on your net income. Okay? So now, let's say our net income, so we understand what net income is, right? Guys, if you understand what net income is, just give me like a thumbs up, give me an emoji, so I understand that you know, and I'll continue to move forward. So you guys understand what net income is, just kind of give me like a thumbs up, okay? So let's talk about if you're an LLC. LLC taxes, right? And this also means sole proprietor. Sole proprietor. Okay. All right, we got emojis. Okay. Anybody have a question there? So your total and stuff to figure out your income. Yeah. So you take your total sales, you minus your total expenses. That will be your net income. Yeah. I'll make sure you guys understand it before I move on. I only see one emoji from Hair by Danielle. Anybody else? Okay, we got an emoji on Instagram. Okay, cool. All right, so I guess I'll move forward with two. Okay. So now let's talk about this is taxed as an LLC or a sole proprietorship. Okay, so remember our net income is 100,000. Remember our net income from the previous example is $100,000. Now, self-employment tax is 15.3% of your net income. Okay, so you're going to have to pay self-employment tax. Self-employment tax is the Social Security and Medicare tax. Okay? So here's how it pretty much works. When you have a job, so everyone's really required to pay 15.3%. Everyone. But when you have a job, when you have a W-2, you actually split that in half with your employer. So when I mentioned earlier, like, hey, you pay 7.65% because 15.3 divided by 2 is what that number is. So if I take 0.153 divided by 2, you see it's at 7.65. Okay, so guys, when you have a job, when you have an employer, you're splitting that in half. You're splitting that 15.3% in half. Your employer pays 7.65%, and the other 7.65% comes out of your check. Okay, so when you're self-employed, you have nobody to split that with. So you pay the entire 15.3%. You just don't have no one to split it with. You're self-employed. You pay that entire 15.3%. All right. So if we pay the entire 15.3% on $100,000, so 100, 1, 2, 3 times 153. Okay. So we take 100 times 0.153. So our self-employment tax, I'm writing SE right here. SE stands for self-employment. So self-employment tax would be $15,300. Okay, so that's just the self-employment tax. You're also going to have to pay federal and state taxes. So your federal and state taxes is also on your net income, your taxable income, what they call it. So you're also going to have to pay taxes like regular, like income tax brackets on your taxable income. This is where you talk about the tax brackets. So when you're self-employed, you're going to have to pay the 15.3%, as well as whatever tax bracket you are in. So let's say in this example, we're in the 20% tax bracket. All right, so we're going to have to pay the 20% on that. So we take 100, 1, 2, 3 times 0.2, right? So we have $20,000. $20,000, okay? And I'm gonna just call this federal taxes. Federal taxes. And if you have state, you're gonna have to pay state taxes as well. Okay? So federal taxes, this is because we're in the 20% tax bracket. That's $20,000. Okay? So now if we look at the total amount of taxes we're gonna pay, we're gonna take our self-employment tax, and we're gonna take our federal tax, so we're gonna add that together. Okay? So if we add these two together, we're gonna get $35,300. Okay? And this is just an example. This number is not exactly how it is. This number is not exactly how it is, guys. This is just an example, so you guys can like just kind of really get the idea across. Okay, so that's if we were taxed as an LLC. Now, to figure out your effective tax rate, this is what's really important. To figure out your effective tax rate, like how much taxes are you paying on your total income? Like how much taxes am I paying on my total income? You're going to take the total amount of taxes you pay, which is $35,300. You're going to divide that by the total amount you made. 1, 2, 3. All right. So this gives us 0.353. That means our effective tax rate when we are in LLC is 35.3%. Yeah. So our effective tax rate, LLC, all right, we're going to pay $35,300 in taxes, which means we pay 35.3% in taxes. All right, we're paying a total of 35.3% in taxes when we're in an LLC. Okay, so let's take the same example, and let's say we were to form an S corp. Now, before I show you this example of an S corp, forming an S corp is not as easy as I'm about to make it sound. You're going to have to incur so many more expenses. You're going to have to work with a tax professional. You're going to have to set up payroll. You're going to make sure your bookkeeping is really important. So, just by adding an S corp in your business, you can expect to pay an additional $7,000. And that $7,000 could be upfront. So, just understand that, hey, if you're not willing to pay like maybe an extra $7,000 a year to save this much on taxes, then maybe this isn't for you. But if you have the money, like, hey, yeah, $7,000 to save $20,000, let's do it. So let's jump into it. Okay. So let's say we set up an S corp. Same thing as before. Your total sales of $200,000. Total sales of $200,000. Your expenses was $100,000. So your net income is $100,000. Okay. Your net income is $100,000. Now this is your business. This is your corporation. You go in there. Maybe you apply at your own job. You hire yourself. You're gonna hire yourself. So you cannot hire yourself if you're an LLC. You can't hire yourself in your business if you're a sole proprietorship. The only way you can legitimately do this is, for one, if you have an S corp. Okay, so when you have an S corp, one of the requirements is that the owner pays himself a reasonable salary. To determine a reasonable salary, you just ask yourself the question, like, what would I pay somebody else to do the job I'm doing? what would I pay somebody else to do the job I'm doing? So if I have a chicken sandwich business, right, and I'm the cook and I'm the cashier, how much would I pay somebody that? $40,000. That sounds good, right? That is a reasonable salary. You have to determine what you would pay somebody else to do that. Or you can go to salary.com or Google it. What is the industry average? That's another way to find out. So let's say you put yourself on W-2. You pay yourself $40,000. Okay? So you put yourself on W-2, right? $40,000. Okay? So that's an expense as well. Paying yourself out of the S corp, that is an expense. That's an expense, right? So now our net income is $60,000. Okay, right? Because we paid an employee ourselves $40,000. So that's an additional expense of $60,000. And remember, how, like I was just speaking about a few minutes ago, employees pay 7.65% of taxes, right? So of course, so this is what I was talking about earlier, guys, that it's more expensive to have an S corp because the S corp has to pay that other half I was just talking about. But just to keep it simple, out of your check is going to come 7.65%. Okay, so let's do the taxes on that real quick. So we have 40,000, 1, 2, 3 times .065, right? So that's $3,060. $3,060 taxes. And you're not paying self-employment taxes because you're employed, so you're going to pay half of that. So we're paying $3,060. Okay. So then we're also going to have to pay taxes on this amount, right? Because that's our new net income, and that flows to the owner, right? So then our new net income in the business is $60,000. That's our new net income because we have an additional expense when we're in the S corp, and that's that W-2 employee right here. Okay, so let's say we're still in this 20% tax bracket. So, right, we're gonna have to pay federal taxes. Federal taxes. Let's say we're 20,000, so that's 60. 1, 2, 3 times 0.2. That's $12,000. $12,000. $12,000. Yeah. So let's say it was $12,000. 1, 2, 3. 12,000. So we'll add these two together. We have $15,060. We make the same amount of money. We do the same exact thing. We just structure it differently. We structure it strategically. So now with an S corp, let's figure out our effective tax rate. Remember, guys, to figure out your effective tax rate, you take the total amount of taxes you pay divided by your net income. So we have 15,060 divided by 60, 1, 2, 3. Okay, so our effective tax rate with an S corp is, can you guys see it? It's 25.1%. All right, so with an LLC, we're paying 35.3%. With an S corp, we're paying 25.1% in taxes. And that's how an S corp works. Typically, you want to jump into an S corp when your net income, your net sales is really around $50,000 or $100,000. That's when you really see the benefit. That's when you realize you can afford it. Because guys, like I said, just because you see the savings doesn't mean it's that simple. There's additional expenses to incur. So if you can't pay like a couple $1,000s up front to implement an S corp strategy, it's probably not for you. Yeah. I hope that makes sense. Guys, if I was able to answer that question, um, let me know, because I'm about to hop off real quick. I'll be back tomorrow. What if your salary is 100K instead of 40K? So if your salary is 100K, that's not a reasonable salary. Remember, you have to pay yourself a reasonable salary. If your salary is 100K, right, you're gonna have $0 in income. Your business is gonna show $0 in income, but you're gonna sell $100,000 on a W-2. If you're making $100,000 and you're paying yourself $100,000, that's not a reasonable salary. Just think about it. Think about it like you're somebody else. If you have a business that's making $100,000, would you pay somebody else $100,000? Right. So you want to make sure it's a reasonable salary. Thank you for that fire. Yeah, that's a lot to know about taxes. I'm gonna try to miss anything. Okay, guys. So yeah, so I'll be back tomorrow. Let me know, scale 1 to 10, how valuable is it to know this information? Scale 1 to 10, how well did I break this down? Was it good? Was it off the chain? Was it fire? Was it? And thank you for those emojis right there. Yeah, 10. Thank you so much. Thank you. Thank you so much. 10. Thank you guys. Thank you. All right, 10. 9.9. I gotta get that point one. So guys, if you see value in this, I appreciate that. I end this live. I'll be back tomorrow. I'm going live every single day at 8 p.m. Central Time, so I can teach you guys taxes. You guys can ask me questions. Make sure you write them down. These lives, there aren't that many people in these lives, so I typically can try to hit every single question. Unfortunately, sometimes I don't. If you need help with your tax situation or anything, feel free to use the link in my bio that says hire me. If I can't reach out to you personally, I definitely have a network of professionals who can take care of you. So no matter what, use that link in my bio. I guarantee you will be taken care of. Also, guys, if you go to my page, there's a donation link. If you guys want to donate to them, that'd be awesome. It does not benefit me at all, but it helps other people start their businesses. It's a nonprofit organization called Opportunity Fund that can help other entrepreneurs like myself, like you watching this, start their own business. But yeah, guys, I'm going to head off of this. I will be back tomorrow, 8 p.m. Central Time. I'm going live every single day. Tell your friends, share it, and I will see you guys tomorrow. Bye-bye.